All right. Good afternoon, everyone. My name is Jared Lopez from Next Generation Trust Services. We do self-directed retirement plans. We're in northern New Jersey. We'd like to thank our special guest speaker, Mr. Matt Allen. He is with North American Savings Bank. They specialize in non-recourse loans. Matt Allen is the director of IRA Lending, so he's definitely a great contact to know at North American Savings Bank. He is also the author of this book that happens to be on my desk. He co-wrote Leverage Your IRA, Maximizing Profits with Real Estate. So it's definitely a pleasure to have Mr. Matt Allen along with us today. Now I'm going to be presenting a little bit regarding self-directed retirement plans. Just general basic investments, restrictions, how to get started, things like that. Then we'll pass it along to Matt to talk more about non-recourse loans. I did tell Matt that I'm a part of 9 real estate investor associations and clubs in the tri-state area. A lot of interest. I don't think a meeting goes past when I don't hear about mortgages within retirement plans. Not a lot of banks do that. North American Savings Bank is one of the banks that specialize in it, and Matt's going to tell us all about that in about 15 minutes. First, let's go over self-directed retirement plans. The easiest way to start is what is Next Generation Trust Services. Next Generation Trust Services is a third-party administrator for self-directed retirement plans. If you invest in an asset, a non-traditional asset, using your retirement plan, you need a third-party administrator to do that. We are not a bank or a financial planning service. We can never really endorse or recommend any type of product. People call me all the time. I had somebody call me the other day and said, Jared, where should I be investing in real estate? Should I be investing in Detroit or Pittsburgh? And the honest answer is I can't help them. Investments in silver and gold, I can't help them either. Basically, the plan is self-directed. It is completely up to the client on what they want to invest in. A little disclaimer, if you were recommended to Next Generation Trust by any sort of third party, we are not affiliated with anyone in any way. We also do not review any merits or the legitimacy of any investment that comes past Next Generation Trust that your IRA does invest in. It's up to you to do the due diligence for your investment. First, we'll get into the types of plans that can be self-directed. The traditional IRA is a tax write-off now, but you will be paying taxes, presumably, at retirement age when you're at a lower income bracket. Presumably, you'd be paying lower taxes at that point. The Roth IRA, you would be taking a hit on the taxes now. You would be paying the taxes this current tax year. However, any assets that you hold within the retirement plan and any earnings are completely tax-free. The SEP IRA is for self-employed individuals. It is the same type of plan as the traditional IRA, which is tax-deferred. However, the contribution limits for a self-employed IRA are much, much higher than the traditional account. The simple IRA is for small businesses. Some employer plans, such as 401k plans, can be self-directed. Some employers have a specific portion that is self-directed. It's very rare. But we just redid our documents, so if anyone's interested in a 401k or an individual K plan that can be self-directed, you can now open that up at Next Generation Trust. Some plans that can be self-directed that are not retirement-related are the Coverdell, which is for child's education, and that's not necessarily only college. It can be used for private schools, books, anything that has to do with education. And also the last account is the health savings account. You do need to qualify for this account, and it is only for high deductible plans. But if you open up a health savings account, you can self-direct that plan. There are several options for funding and self-directed accounts. You can make your contribution up to the year's contribution limit. This year, the contribution limits for a traditional IRA and a Roth IRA are $5,000. And for the SEP, it is the lower value of $49,000 or 25% of your salary. Transfer is when you have a IRA with doing traditional investing with another custodian, and you wish to move the funds from a traditional IRA, which is tax deferred, to a traditional IRA, which you can self-direct. That would be a transfer. It's moving between like plans. A rollover is when you move funds between unlike plans. So if you just got laid off or you just recently left your job and you have an old 401k sitting there doing nothing, you can roll that over into a traditional IRA account here, and that would be considered a rollover. A conversion is becoming more and more popular. What it is you have a traditional IRA account. You wish to pay the taxes in this tax year, convert that into a Roth account, just so your assets and your earnings from here on out are completely tax-free. It's definitely becoming more and more popular. There are two restrictions when it comes to self-directing your retirement plan. The first is prohibited transactions, and the second is dealing with disqualified persons. Disqualified persons are people who are unable to provide a service or get any personal gain out of your IRA investment. What that means is the IRA holder, so say the IRA holder is myself and I own a piece of property, I am unable to have any of these disqualified persons provide any service to that property or rent out that property. The list of disqualified persons includes me, myself, my spouse, any ascendants and their spouses, any descendants and their spouses, fiduciaries to the account, business partners, and anyone providing a service to the account. So, take my example. If I own a property with my self-directed IRA, my father's contracting company is unable to do construction work. My son is unable to rent out that property. Those are all disqualified. As far as prohibited transactions, there are two things in a self-directed IRA that you cannot invest in. Those two things are life insurance and collectibles. Collectibles meaning art, wine, stamps. My personal favorite is baseball cards. You just cannot have that in your self-directed IRA. Now that we got the bad stuff out of the way, the possible IRA investments are literally everything else. A lot of our clients are doing real estate. And in real estate, it's any type of real estate you want to hold. You can hold apartments, condos, properties, commercial properties. You could do mortgages. You could do tax liens. Real estate is by far the most popular investment right now. Other options are loans and notes, investments in LLCs and private companies, hedge funds, precious metals. The list really goes on and on and on. Now, I know most of the people here are interested in real estate if you're looking to have a non-recourse loan. So let me take you through the example of how to purchase a property using a self-directed IRA. First, which is not listed on here, is to set up your self-directed IRA account with an administrator like Next Generation Trust Services and fund it with at least enough for a good faith deposit. At that point, you can go and you would search for an investment property as you normally would outside of your IRA. But when it comes time to negotiate the purchase contract, it wouldn't be Jared Lopez that is purchasing the property. It is Jared Lopez's IRA account, which has its own name. And on the example you can see there, it's Next Generation TS SBO for the benefit of the person's name, IRA, and then the IRA account number. Once the contract is approved, you submit that to us with the deposit instructions. We would send out the deposit for you because your IRA funds will be held with your account here. Once we submit the deposit, you would do your due diligence as you normally would outside of your IRA, but all of the expenses must come out of your IRA. You direct us to purchase these home inspection, title search, anything you would do for your due diligence. After that's done, you submit the approved closing documents to Next Generation, and we execute the closing documents, and we pay who you asked us to pay. We fund the escrow. And at that point, the IRA is the owner of this property. Next Generation TSFBO, your name, IRA account number, now owns the property. That'll do it from my portion. I know it was a very brief rundown, but if you have any questions, please email info, that's INFO, at nextgenerationtrust.com. And the direct phone number here is 973-533-1880. Again, my name is Jared Lopez. If you want to reach out to me, I'll be at that number. My extension is 123. And now, give me 1 second. I'm going to pass it over to Matt Allen to talk about non-recourse loans.
Hi, Matt. Are you there?
Hi, Matt. Are you there? Okay, I'm going to make you the presenter. And you can go.
Okay. Thank you very much, Jared, for the introduction. And, we'd just like to thank everyone that's on the call today. That hopefully you'll get some good information out of it that you can translate to your self-directed retirement plan. Again, my name is Matt Allen with North American Savings Bank, and I'm in charge of our IRA Lending department. And we lend to self-directed IRAs to help purchase real estate. And today I want to give you an overview of what you can expect if this is an option you're looking into to help diversify. And as Jared mentioned in the previous slide, there are multiple options how you can tap into different asset classes with your self-directed IRA account, but the most popular one is real estate. So we're going to indulge a little bit more in the real estate portion and also non-recourse financing. So with the first slide that I have up, some important rules that you need to recognize that it has to be for rental purposes. I guess it has to be for investment purposes would be a better way to put that, because in some cases people are buying rental property or an investment property and they're not renting out, whether it's raw land. One would be a good example where they might not have a tenant in place. You can't live in that property at any time throughout the year, even if you want to buy a condo in Florida as a vacation home that you use a month out of the year. That is prohibited. And then all improvements and repairs have to come from that IRA. So whether it's fixing that leaky faucet, repairing the roof, making a mortgage payment, any expenses are going to have to come out of the plan that is on title. And there's three ways you can purchase real estate in an IRA. First one is to purchase it outright. So if you're buying $100,000 single family home as investment, that's all. You have $120,000 in your IRA account, well, you can pay for that property outright. $100,000 would come out of the account, go and towards the purchase of that asset from your account. So it's not considered a distribution because it's going towards the purchase of the asset, just like if you were to buy some stock to buy VM. The second option is to partner with another IRA or another investor. So if you have that $100,000 home, you only have $60,000 in your IRA. Obviously, you're either going to partner or going to a loan. If you have another IRA account or another investor that's interested in that transaction, you can partner up. Let's say you do a 50-50 split between the two. So then, throughout the duration of ownership, each party on title will be responsible for 50% of all expenses, including the mortgage payment. And then your third option is to use leverage, and that's a non-recourse loan. And that's what we're going to touch on in more detail throughout the next slide. But if you don't have enough funds, don't have a partner, then you can get financing. So what would be the advantages of debt financing? Why would you want to use leverage with your retirement plan? And in the second thing we're going to discuss, how do you get a non-recourse loan to buy real estate in an IRA? And then what kind of guidelines and parameters will you look for? What's going to be different than what you're accustomed to when you're buying real estate in your personal name and getting a loan? We've touched on this. You don't have enough money in your self-directed IRA, but you have a property that you really want to purchase. You think it would have excellent cash flow. What do? Well, acquire a non-recourse loan would be an option you could take. And some of you might be wondering, what is a non-recourse loan? Well, that's a term some of you may be familiar with, but the actual definition need more clarity. Non-recourse loan. When you're buying real estate in your personal name, in most states you're signing a personal guarantee on that property now. So if that home goes into foreclosure, the bank or the lender has to take it back, they can go after you personally. They can go after your other assets, such as your checking account, savings, automobile, whatever allows them to recover any losses they couldn't recover from the sale of that home in a foreclosure. Now, the difference with a non-recourse loan is there is no personal guarantee that is signed by you or your IRA account. So the only recourse the lender has is the real estate, which is 100% of the collateral. So that is the main difference for a non-recourse loan. And the reason this is required, the IRS is trying enough to allow us to purchase multiple asset classes, different asset classes in our retirement fund. But they're going to lay out the rule in publication 590. If you want more information on that, you can go to irs.gov. And it states that you cannot use your IRA as security for a loan. So we discussed that earlier. That's why a non-recourse loan is the only option available. And most banks don't offer this type of transaction. You can go down to Wells Fargo, Bank of America, and they're either going to look at your puzzle as far as what is a non-recourse loan, or just tell you that's something we're not interested in. We just don't provide that. So you have to find a bank that does specialize in a non-recourse loan specifically to self-directed plans. A little background on North American Savings Bank, for those of you not familiar with us. We are a federal savings bank. We're regulated by the OCC. We've been around since 1927, based out of Kansas City, Missouri. We have 10 deposit branches throughout the Kansas City metro area. And we have 4 lending offices throughout the state also. We're publicly traded on NASDAQ under NASB. And a lot of you are most likely familiar with LendingTree. We are #1 lender through LendingTree. So we close a lot of transactions nationwide on the forward side, over $2 billion last year. So we do have a large presence for owner-occupied homes nationwide too. So let's dig into this some more with the non-recourse financing and how it can help you grow your retirement plan. What would be the advantages of doing this? Well, the main one is all your net proceeds are going to go back into that IRA tax-free. So all the rental income you receive from the tenant is going to go back into that Roth or traditional self-directed IRA. Same with any appreciation. So when you sell that home, you're going to receive the benefit of appreciation with that tax-free or tax-deferred benefit. Now, leveraging, allows for larger gains. So if you only have $100,000, obviously you can only buy one property for $100,000 worth. So if you use leverage, you can look at 2, possibly 3 properties, and really help spread that out so you could have larger gains once you do sell those properties. And then diversification, that word does get thrown out a lot, but it is key. I think a lot of us have learned in the past 4 or 5 years that not everything tied up in the stock market, that could be detrimental to your retirement funds. And it's good to look at different asset classes. If real estate is one of those that you're comfortable with, then this is something you really should look into. As far as eligibility, because it is non-recourse, they doesn't have that security they normally get with a recourse loan, they're going to require a little bit more money down. So you do have to have some skin in the game. And as far as North American Savings Bank, minimum down payment requirement is 30% of the purchase price. And we'll move to the next slide, and I'll explain a little more detail as far as different property types. So on single-family homes, minimum down payment is going to be 30-35%. 2 to 4 units, 40. Same with condos, and then multifamily, which we classify as 5+ units. You would need to put 40% down, and we really lend up to around 8 to 10 units. So anything larger than that, we're probably going to pass on. And Jared did touch on this earlier. When you are taking title on an investment property that you're going to own in your IRA, you make sure the purchase contract is drawn up correctly. And it's recommended you do this up front instead of having to go back and make corrections. A lot of times, the seller, they may have an issue with this, especially if you're dealing with a HUD property that's HUD-owned. A lot of times that can be a lot of loopholes and a lot of resistance by HUD. So I would recommend on the purchase contract you do this initially, and that would be next generation, TS, LLC, FPO, your name, IRA. So that's how the property will be taken title, be vested that way, as long as you own it. And same with the title, the insurance, a purchase contract, everything needs to read in the name of the IRA. Now, if you were to partner with another investor, let's say another IRA, that would read next generation TS, LLC, FBO, John Doe IRA, 50% undivided interest, and then next generation TS, LLC, FBO, John IRA, undivided 50%, and then it would also the same setup, and then you would insert the other investor's name with undivided 50% interest. So, it can be set up any percentage of you decide between the two parties, and it can be more than 2. It's not limited to just 2 partners. You can have 3, 4 investors on title at the same time. Since we are a federal savings bank, we do have the capability of lending all 50 states. There's a couple of areas we do look at closer right now. The Vegas area, Michigan. We still lend in Arizona, California, Florida. We might go up to 60% instead of a 70% on some homes. It's going to be case by case, but we do have that capability, lend in all 50 states. We do get asked occasionally if we will lend offshore properties, and that's something we do not do. So it is limited to the United States. You have the option of buying offshore property, but as far as getting non-recourse financing, that would be a definite challenge. I'm just not aware of anybody that offers that at this particular time. Processing time frame. With this type of transaction, there's actually two signatures that are going to be required on the closing document. Let's say you're buying a piece of real estate in Texas, single-family home in Texas. You live in Florida, and then next generation is in New Jersey. So what happens is we email the closing documents to the title company in Texas. They're going to forward the documents to you in Florida. You're going to read them through everything, make sure you're comfortable with the numbers. Then you'll forward it on to next generation, and they will sign the closing documents, and then they'll return them to the title company in Texas, and that's what will actually sign the close. So keep that in mind when you're making an offer. If you're accustomed to a 30-day closing, or that's the norm in that area, you might want to make the offer with an extra 5 or 10 day buffer, just to give you some flexibility if there are some hiccups with the transition of the paperwork from hand to hand. Type of loan programs available. We offer 5-year ARM, 10-year fixed, 15-year, 20, and 25-year fixed. They are principal and interest payments, and our minimum loan size is around $50,000. The ARM product right now is at 4%. Your fixed are going to be in the 5s and low 6s. The rates don't adjust daily, and they're going to be a little bit higher because they are non-recourse loans. And we don't sell these in the secondary market, so we do hold 100% of these loans in our own portfolio. Now, if you already own real estate in your retirement plan, and you bought a home 4 years ago, pay cash for it, or pay cash with your IRA funds, and there were non-recourse funds available, you can actually come to NASB, and we can do a cash-out refi. So we can take that equity and all the loan proceeds, we would go back into your IRA, and that would allow you to either improve the property or go out and look at different assets you can purchase, including more real estate. And there really is no difference on our end, except we're not dealing with the seller in this case. Let's get into eligible property types. I touched on this a little bit, but we're going to, I guess we went on the property types we're familiar with and comfortable with. So single-family homes, condos, PUDs, 2 to 4 units, multifamily. Those are kind of the bread and butter of what our, I guess the bank looks for, loan lending, non-recourse. So if we go to the next slide, this is probably more important to remember. Property types that we're not interested in. And that would be raw land. Main reason for raw land is because there's no income to offset that mortgage payment. So if you have a piece of raw land, and there's no tenant occupying it, obviously you're not going to have that cash flow. So your IRA is just going to sit on a monthly basis. As far as construction loans, we will get involved when the property is 100% complete and we can pay off that construction loan, but North American Savings Bank is not going to provide that loan up front. So you would have to get a builder that's willing to finance it until completion. We come in, we do the perm loan, and then we take it from there as long as you own that property. Some of the others, high-rise condos, small square footage, mini storage, entertainment properties, things we're just not looking for. And if you think about it, these are property types that are a little bit unique. So if we take back a small square footage condo that's, say, 400 square feet, there's not as many buyers for that. So it's going to be harder for us to load it. So we may have it sit on it for up to a year or longer. So we're not in the business of selling property, and a single-family home is a lot easier for us to sell than some of these unique property types we have listed here. Now, we primarily hit on self-directed IRAs, but you also have the option of getting the self-directed funds involved with LLCs, solo 401k plans, C corporations, partnerships, and we will lend to any of these entities. So if you wanted to create an LLC with IRA funds that have membership within that plan, that's a definite option. And really, on our end, there's no difference except how title is taken and the documentation we require up front before we can get that loan fully approved. Well, let's get into the actual criteria of what we're going to look for and what most investors are going to look for when they're sort of analyzing the property to make sure that it does make sense from a financial standpoint, and it would be beneficial and create that positive cash flow that both the lender, NASB, and yourself are looking for. So when we look at cash flow, we like to see a minimum 20-25% positive cash flow in single-family homes, and then the 25% minimum for 2 to 4 unit properties. And I'm going to give you an example here. Let's go back to that property in Texas that I discussed earlier. Let's say you found a property for $125,000 and paid it off for single-family home. The going market rent is $1,400 a month, which I indicated there. So you're roughly going to get around $17,000 in gross annual income. So you subtract out all those expenses. Vacancy factor, we take 7% of the gross annual income. So that's a number NASB uses, the 7%. And then you have your taxes, your real estate taxes, your hazard insurance, and then we also use a maintenance and repair of around $400 a year. So we anticipate you're going to have to spend $400 a year for upkeep on that home. And then a management fee factor of 6%. That might be a little bit low. I know probably normally it's closer to 8-10% for a property manager. But when we analyze a property, we're going to use 6%. So when you deduct out all those expenses, it gives you a number of around $11,000. So when we go to the next slide, you have a net operating income of around $11,000, and you're going to put $50,000 down. So you're going to have a loan, a non-recourse loan for $75,000 with an interest rate of 6%. So the annual P&I, principal and interest payment, is around $5,800 a year. So when you divide that NOI by the annual principal and interest, it gives you what we call a debt service coverage ratio, DSCR for short. 1.0 is the break-even mark. So in this scenario, it's 1.88. And I mentioned earlier that we like to see a 25% positive cash flow in a single-family home, which would be 1.25. So that this property analysis that we see up front definitely exceeds our requirements, and from our perspective would be a good fit, and it's something we would lend on, and also would be beneficial for your retirement plan too. As far as the costs associated with this type of loan, we charge 1% origination fee, underwriting fee, processing, and then an appraisal. The appraisal is probably the most important ingredient. Now, we have to verify that this is a satisfactory collateral, the property itself, and then we're also going to get rent comps with that appraisal. So if you're indicating the going market rent is $1,400 a month, we need the appraiser to provide 3 rent comps that can verify that too. Because if it comes in a lot lower, let's say $1,100, well, that really affects our analysis, and there might be some changes made as far as the amount that we would lend. We do escrow for taxes and insurance. So your IRA is still responsible for those, and that will be included in your mortgage payment, and then we pay those when they come due. Now, a couple other notes to mention. When you buy real estate in your retirement plan, it's going to go under the tax ID number of the self-directed company that you're using. So it's not going to go under your Social Security number. So if you're a seasoned investor and you have maxed out the number of loans that Fannie Mae Freddie Mac allow, you realize it's a little tougher to get decent rates in your personal name. Well, that's not going to apply with this type of transaction. So this loan would not show up on your credit report and would not affect your debt-to-income ratio for future purchases in your name. That's one advantage. Now, as far as three things we really look for when we're lending, we're going to look for the property itself, make sure it's in satisfactory condition. Second thing is the cash flow. So that DSCR that we mentioned, that's the second ingredient. And then the third thing is your IRA account. Do you have enough funds for the down payment and reserves? Because what happens if you have a 6-month vacancy and something unexpected happens? You have to fix the property, you can't rent it out for a while. Stuff make that mortgage payment. You need to have enough funds in your retirement plan. So we like to see up front that you have a minimum of 10% of the loan size in reserves. So if you have that $100,000 loan, we would like to see a minimum $10,000 in there closing, just as a cushion for those unexpected circumstances that can arise. And with the next slide, documentation requires the loan approval. One benefit of a non-recourse loan is you're not qualifying for that loan yourself. So we're not looking at your income, we're not looking at your employment, we don't even ask because it's irrelevant. So really, I mentioned those three things we look at is what we're going to use to qualify the transaction. So we get started with this. When you contact NASB, you'll speak to one of our non-recourse specialists, and there's a one-page form that you know. And all they ask for is just the information on the property itself. So if you need a pre-approval letter, your real estate agent requires that before we'll submit an offer to the seller, we can get that to you. We're asking for basic information such as expected rent, taxes, insurance, address, and also a visual of the property. We need a visual picture to see what kind of condition it is up front. So once we receive that, we turn around and send it to our loan committee. So within 24 hours, we'll have an answer for you, and then you can go off and make that offer if we're able to pre-approve that property. And all that can be found on our website, IRALending.com, as far as documentation that we would need. To move to the next slide, just to give you some more resources, we have a Facebook page, IRA Lending, and also a LinkedIn group, IRA Lending. And then also, Jared mentioned the book that we have out. We feel it's a good reference, explains from start to finish how to start up a self-directed IRA, how to get that loan, exit strategies, prohibit transactions. This goes in a lot more detail, and that is something that also can be found on our website, IRA Lending. We have a podcast there, and then on our blog page we also have 10 short videos about self-directed IRAs and kind of the basics of what to look for, some of the things we've discussed in this presentation. So with that, that's the end of my presentation. And Jared, if you want to come back on, and if there's any questions, I'll be more than happy to answer those.
Sure. Thank you so much, Matt.
Sure.
That was a fantastic presentation. Right now we're going to take any questions. So if you have any questions, you can chat them into the chat box, either to everybody or to me, and me and Matt can take any questions that you may have. All right, now we have our first question. He says that he knows that your credit isn't affected by a non-recourse loan, but he is wondering, do they look at your credit at all before being approved?
That's a good question. It's not a credit-driven decision, so no, it's not affected whether or not we approve the loan. I will say that we pull credit from one of the 3 credit bureaus, and the only reason we do that is to get a sense for any outstanding tax liens or public records, anything that could affect the transaction from a legal sense. So it is not a credit-driven decision for us. Whether you have a 650 or an 850 credit score, that's not going to affect your rate or whether you qualify. Again, it comes down to the condition of the property, the cash flow, and then your IRA account.
Gotcha. The next question that came in, is the loan based on appraised value or the purchase price?
It's going to be based on the lessor's decision. So if you're making it, if you're paying $125,000 for a home, but for some reason it comes on $115,000. We're only going to lend on that $115,000. And we would recommend you renegotiate with the seller or come up with some other solution, I guess, for that. So it would be the lesser of the two purchase price over the take time.
If a property is bought at a discount, how long before one can refinance and get cash out?
That's a good question. If you're buying a discounted property, which almost every market right now has good deals going on, it's going to be based on the original purchase price and any money you put into it. So if you're buying it and improving it, let's say you paid $50,000 for it, you put 15 into it, we would base the loan amount off that 65, even though you feel that it's worth 85, 90. We would need to see some seasoning before we're going to base it off that appraised value if it's such rapid appreciation. So there are some limitations to those variables.
Thank you. Next one. How about if the property you want to buy needs improvement? Would such a property be considered?
It depends on the improvements. As I mentioned, the only collateral we have is the property. So if you're buying a home that has structural damage, the roof is in stress, there's a lot of major issues, and you have to put a lot of money into it just to get it into a rentable condition, we're probably going to pass on it. But if it is something that needs, carpet, paint, just updating, that's something we'll do.
The next one, our self-directed IRA owns an LLC which currently owns a mixed-use 5-unit building. So this is a very specific question. The balloon payment is due in 2014. Is this something you would refinance?
The quick answer is no, because it's mixed usage. We don't really lend on commercial real estate. So I'm assuming it's maybe residential upstairs, and then below there's a storefront or something for an office. That's just a property type we don't lend on. So no, we wouldn't get close to that one.
Why do bigger banks not offer non-recourse loans?
Couple of reasons. And some of them have been approached about non-recourse financing. Right now, there's just not a big enough market for it. So for some of the big players out there, Bank of America, have spent a lot of money on education, new staff, resources. For a small return, it just doesn't make sense. So something like North American Savings Bank, where we're an aggressive portfolio lender, we're a small, mid-sized bank. Something we're really comfortable with that is a good fit. And we've been doing this since 2004. We have a good understanding of it. So unless, or still, I should say, this becomes more well-known nationwide, you're probably not going to see the larger banks get involved.
Gotcha. Any more questions? We'll give them 1 minute to see if anyone else has any more questions for you. Again, thank you so much for that information. It's great to know, because before, when people would ask me about non-recourse loans, I would say you need to talk to any one of these banks, and I would just kind of hand out the information. I didn't really I didn't really understand how it worked. So thank you so much for taking us through the steps. It's good to know that you need at least 30 to 35% if you're purchasing a single family, and 40% for anything else, basically. That's correct, Matt?
Yeah, that's correct. Thank you for having me on. I'm glad we were able to meet and help educate your clients. And if anybody ever has any questions, you can contact me directly, or again, we have an IRA Lending department with the information posted in the webinar. I'd be more than happy to help see if the situation works for you. So thanks again, Derek.
One more question. Do you mind?
No, yeah, sure.
Do you lend outside of an IRA on similar terms?
This question does come up frequently with say, an LLC where there's only personal funds involved. We've done a few of those over the years, but we really designed this program to help away from public funds. So in those cases, you're going to have to, if somebody has a specific scenario, we'll take a look at it. But we really do try to focus on non-recourse lending to self-directed plans. I know we would not lend non-recourse to an individual, but in some cases, again, we have to attend to succession LLC.
Wonderful. Again, we have a number of clients that do use North American Savings Bank for their non-recourse loans. You can get in touch with Matt. Now you know. Now you have the number there. Definitely pick up Leverage Your IRA. It's a fantastic read if you're thinking about investing in real estate using a self-directed IRA, and then going into unrelated business income tax and all sorts of non-recourse lending questions. It's really a fantastic read. Thank you again, Matt, so much, and we'll talk to you soon. Thank you, everyone.